Welcome to the Jill on Money Show, powered by The Compound. I'm Jill Schlesinger, and I'm joined by the amazing, illustrative Michael Batnick. And you talked about a little flutter in your belly. What's going on for
I'm
you?
a little bit nervous. I'm not usually on this side of the microphone.
How does that feel, like, besides nervous? Are you excited, though?
I'm beyond thrilled that we have the privilege to do this with you.
This is so
I'm
much fun.
excited.
I totally fell in love with you guys. I think this is well reported and documented that I fell in love with you and Josh. And I love that you guys have a magical relationship together. And I feel like I'm sort of like tapping into it, and it's wonderful. So we were able to interview Josh, and now we get to see what is Michael Batnick all about. And first of all, a big difference between you and Josh is that you came to the industry sort of from a different angle. So he came as like the broker who did financial planning. Tell us your origin story.
Before we get to my origin story, the kinship that we felt with you and the chemistry that we felt was undeniable, instantaneous, and you're the guest that the next morning my phone like lit up like a menorah. Like
Happy Hanukkah.
So yeah, we're thrilled to have you. All right, my origin story. I've told this in the past, but not to your audience. So I have an interesting one. I did not take my education seriously whatsoever, and I paid the price for that. And it occurred to me at 20-something years old, oh, this is why those dorks pay attention in class and do their homework and get good grades, so that you're not cold calling strangers to sell them a shitty product. And so that's what I did. Coming out of college, I was a year and a half late. It was during the heart of the great financial crisis. Really good time to be coming into a career in finance with a horrible resume. I had Cabana Boy on my resume. That's how unserious I took.
But can I just say one thing? Where were you at Cabana Boy? At ABC?
Sunny Atlantic.
Okay. So I think in a weird way, sometimes when I see those little details in a resume that has other things, I think there's somebody who knows how to deal with people.
You know what? Thank you. You know what else my resume had?
What else?
Valet parker, waiter. So I was a
Which of
worker.
those jobs did you like the most?
I was a worker. I loved being a Cabana Boy, and I enjoyed being a waiter. I enjoyed working.
Okay. So you said, but Cabana Boy kind of limited unless you're traveling between New York and Florida.
It was a summer job.
All right.
So,
What else?
So when I graduated from Queens College, after being politely dismissed from Indiana twice,
Not once, but twice.
I got a job at an insurance company right here on Fifth Avenue.
Oh,
Yeah.
okay.
Very prestigious.
Okay.
People wore suits, ties.
It seemed like a good job.
So my first day walking around seeing people in suits, like, see, I made it. It's okay. I was right. I didn't need to pay attention.
Absolutely.
Like, whatever. No big deal. So yeah, that illusion or delusion wore off very quickly. Very, very quickly. So we were in a bullpen, making phone calls, just getting lists, and the product was life insurance.
All kinds.
All kinds.
Whole life, term, disability.
Everyone.
Okay.
And if you could sell them a financial plan, all the better.
Mm.
So you sell them a plan, you sell them life insurance, you sell them disability insurance. If they don't have money for the life insurance, you find the money. The final straw for me, so I was there for a year and a half, and I was the last one in my class. And not because I was successful, it was the exact opposite. I was so unsuccessful, I couldn't leave. I had
nowhere to go.
I had nowhere to go. And what did I want to do? I don't know. I wanted to be in the market.
That was what you said. I want to be in the market. So you did have some curiosity around investing. That was something you liked.
That stems from, it's funny, I spent so much of my professional career talking about why the dangers of picking individual stocks. Now, I'm a hypocrite because I still pick stocks. I still love to do it. But it's not where all my money is. It's, as you and Josh were discussing, it's my fun money. Now, it's a little bit more than fun money, but it's fun. I don't...
You're young.
Exactly. I have no delusion that I will beat the market, but I love it.
Okay.
But my life was actually changed from an individual stock.
Which one?
Celgene.
Oh, interesting. Who owned it?
My mother.
Okay.
So my parents got divorced when I was young. And my mother she went back to work. She was a secretary. I don't think she ever made more than $40,000 a year.
Okay.
And her brother, who also loved the market, got that from his grandfather, bought shares in a small biotech company in 1996. And my mother turned, I don't know what it is, $15,000 literally into almost $1 million.
Really?
$1 million.
Wow.
Yeah. She never sold, got cut in half many times, And so Celgene was a buzzword around the family.
Yeah.
Growing up. So I was a little bit curious, but you would think it's interesting, and I've thought about this. Why didn't that trigger a rush, like a real curiosity? Like, oh my God, you can get rich picking stocks.
Right.
Like,
This can go from 15 to $1 million. And how do I do that many more times?
right.
Right.
That would be a logical conclusion or lines to draw for a young person. It didn't click with me
Okay.
for whatever reason. Now, I made my mom buy me Celgene options for my 18th birthday or 21st birthday. I can't remember how old you have
That's
to be.
kind of funny.
Which I doubled my money and then rolled it again and lost it all.
Great.
So there was always some sort of mild curiosity around the market. And then when I was at the insurance company, my father introduced me, my father was a periodontist. He introduced me to one of his patients who was a broker at Wells Fargo. And this gentleman, I guess, took a liking to me and every day would send me articles. Now, this is 2008, 2009.
Wow.
Dave Rosenberg, Breakfast with Dave, Ed Yardeni, and I can't remember who the third one was, but I found like I felt my calling. Like, oh my God, this has been here the whole time.
Uh-huh.
How am I only just discovering this? So I would go into my office and I would, I guess, sort of pretend to be on phone calls. I was floating. So I was no salary.
Mm-hmm.
And I was actually, to add insult to injury, I was paying rent for the privilege of working there.
Like rent is like you were a hairstylist.
I was paying
renting a chair.
$300 or $400 a month.
Oh my God.
Without a salary.
I didn't know they did that.
Where did the money come from? I was rich as a young person. I think I saved like $30,000 or $40,000 because I was working full time for all those years.
Ah.
And so that all that money went to zero as I supported myself. And those were dark days. I had my eye was twitching for like 8 months. My mother was dying. My bank account was getting drained. I had no hope for a career. Like, it was dark. And so, so I eventually left the insurance company because, I mean, it was getting comical. You know what I mean? Like,
yes, of course.
I hadn't, to say that I didn't believe in the product or the industry. Now, life insurance is important.
Yeah,
People
we
need
talk
life
about it
insurance.
all the time. They don't need all the crap that's sold to them, but some form of term life insurance
Whole
is
life,
very important.
Whole life is not the answer for everything.
Or even anything. Maybe 5%.
But my wife's father passed away when she was very young. And it blew up their family's financial life.
Of course.
So it's you need life insurance, but the way that it was being sold was really gross.
I know.
So luckily, I didn't sell any policies. I think now my father bought one. I bought one for my girlfriend at the time to meet the quota, which I didn't meet. And so I was there for 18 months, not selling anything, but I was paying rent, and I guess they left me alone. So it just became weird that I was there for so long. Like, people were like, who is this guy? At least that's what I'm sure nobody was saying that. But so I left with nowhere to go except for the library.
Okay. Oh, I love a library.
That's where I went.
And isn't it funny? Your office right across the street from a library.
Yeah, not this library. I went to the Merrick Library.
All right. And you were studying up?
And I was studying. I was aggressively making up for lost time. I had spent 25 years being a jackass. And so it was time to get serious. And so I would take my wife, or my girlfriend at the time, now my wife, I would take her to the train station. And then I would spend 9 hours in the library.
Oh my God. And what were you reading?
I started with The Intelligent Investor.
Of course you did.
As one does.
Right.
And just the way that I describe knowledge of any kind, certainly in finance, is like, and history, I guess, when you put your thumb on the iPad and the fingerprints show up for the first time, and then every time you press them down, they fill in more and more and more, and the gaps eventually all get filled. I did that. And I read, not every, but I read a lot of books.
Mm-hmm.
And I took it really, really seriously. And it did not help. I always had inner confidence, but not external confidence. I wasn't going to really impress anybody in a first meeting.
Mm-hmm.
So I just thought, I just need somebody to give me a chance.
But meanwhile, can I just do like a personal finance
yeah.
question? So your then girlfriend is sort of helping to support you at that time?
So when my mother passed, she left me money.
The Celgene
money.
You got to step up in cost
So
basis.
I was 25 years old with a couple of $100,000. And I thought, I mean, what do you think I did? I thought I was going to be Paul Tudor Jones.
Mm-hmm.
And I traded the shit out of it. Now, there was obviously a massive emotional attachment to the money,
mm-hmm.
right? So I didn't take any big losses. Like, obviously, I didn't blow that up.
Right.
Because it was my mom's money. It wasn't mine, it was hers. So I would buy a stock and stare at the screen and hope that my magical staring would make the price go up. And I believe it or not, it didn't work.
I mean, that is shocking to hear.
It didn't work. So yeah, no, I was flailing. I was applying for jobs all over the place. I almost considered moving to San Antonio for an external wholesaler role. You don't need to move to San Antonio for that.
No.
They were like, "What are you doing, pathetic weirdo?"
Uh-huh.
So I was very close to just throwing in the towel. At this point, it was probably like 2011. So it's, a year and a half, like literally unemployed, not like nothing going on.
I'm worried for you now.
I was very worried for me. It wasn't great.
Tell me about a girlfriend who loves you so much that is going to stay by your side while you're flailing about. What did she see in you? I know. I love that I made Michael cry so early in the pod.
A little bit. How bad were her options? Oh my goodness.
No, that's not how I framed it.
We were relatively young. So, and to her credit, I'm sure she had this conversation with her friends, but she never gave me a ton of shit, which she could have. And she never threatened you have 2 months or I'm leaving. I don't know what she saw, but she stuck by me.
It's a very sweet thing. I mean, it's hard to get through those times. And it's easier when you're in your 20s. But at any time, you meet people now. Mark and I were laughing. We were doing an interview early on, like all these kids who were like, the young millennials fire movement. And there was a woman who's like, if I meet someone and that person has debt, I won't date them. And we were like, what?
Crazy.
That's insane. Yeah. Like, okay, that's not financially responsible. That's
nice
a little bit
to meet
weird.
You. Show me your credit card balance.
Right. Can I see, they love talking about their credit scores. That's shocking. All right. So let's get back. She loves you. You're flailing. How do we get you to Ritholtz?
So the last hope that I had, this was Michael Batnick, the last hope. I had an interview. It was not an interview at JetBlue.
Okay.
My cousin was an early JetBlue employee.
Did you have to go to Kennedy for that interview?
This was in their office in Queensboro, I think right by Queensboro Plaza.
Okay.
And I walked into the CFO's office and I think he gave me about 2 minutes. I was like, what are you doing here? Wait, you want to be in finance? It was not a great interview. I mean, I did not do well. Anyway, so I'm going to the Knicks game. It was a playoff game.
And you're a lifelong Knicks fan.
Love the Knicks more than anything.
More than the Giants?
More than the Giants. Oh. I mean, it's 1A, 1B. It's 1A, 1B.
Okay.
And so it's game 3, 2011, and the Heat are in town. I should be very excited.
Yes, you should.
As I was sitting in my seat, I get an email from this person. Nice to meet you. Sorry, we can't help you. And I was despondent, not because I thought that I was going to get a job there, but I really, really didn't know what to do.
Mm-hmm.
It was throw in the towel time, go get a job, just be a waiter, and I don't know, maybe you'll figure it out.
Mm-hmm.
And this was a light bulb moment for me. I really do remember it like it was yesterday. Mm-hmm. And my friend said, what's wrong? I showed him the email and I was upset. And in the third quarter, Mario Chalmers hit a 3 to put us down by 21 points. Mm. And I said, I'm leaving. And there was probably 2 minutes to go in the third, something like that. And my friend goes, what do you mean? Where are you going? It's the playoffs. And I said, I got to go home. And on the way home, I'm on my BlackBerry and I'm scrolling through Twitter.
I love BlackBerries, by the way. I'm sad that I have an iPhone.
They were good. They were good. And Josh is tweeting about
downtown Josh Brown, the reform broker, tweeting, and you're following him.
So Josh was really my North Star.
Really?
He was the person that if I could have worked for anyone, it would have been him.
Because he made the transition from almost a similar path as you?
Yeah. So what his story and the truth that he was telling, I lived a similar experience. Mm-hmm. Different product, not quite as gross, but not great.
Yeah.
Same incentives. And he was telling the truth and he got out. And so Josh is tweeting about how old he feels because Kurt Cobain's daughter, I think it was Kurt Cobain's daughter had just turned 18.
Oh.
And so he's tweeting about it. And as we pull into Merrick train station, my phone died, which is a very important detail. Because if my phone didn't die, I would have
been looking at your
phone. Looking at my phone.
And amazing. Put your phone down.
Put
Okay.
well,
What happens?
My phone died, so I put it in your pocket, and I walked past Josh.
Oh, wait a minute. Hold on. Okay. This is a movie scene. Who are we going to have play each of you? Who would you like to play you?
Josh would be played by Paul Giamatti.
Okay. And you?
Tom Holland.
Very nice. Okay, great. Of course. Okay. And here's your idol. You recognize him.
Yeah.
He walks by you.
Yep.
Do you do a double take like one of these? Or did you say, oh my God, I love you? Or
No,
what happens?
I froze.
It's kind of how I felt when I met you.
And I said, I have to turn around and talk to this guy.
Okay.
So I froze, skipped a beat, and said, turn around. I tapped him on the shoulder, and we spoke for 20 minutes.
Yeah.
And my girlfriend wife, was waiting for me at the train station, and she said, who was that? And I said, that's my Bethany Frankel.
Oh, very nice. And so what happened after that?
So after that, I had followed up with an email, and I don't think he got back to me. But it was in the spring, I think, that he posted, Barry and I are hiring.
Boom.
Yeah, exactly. So I got it in his inbox or his Twitter DM, and I interviewed.
And you still don't have, like, I know that you're a CFA now.
Yeah.
But did you start that process
Yes.
prior? Okay.
Yes.
So can you explain to everybody what is a CFA and what that process entails?
Yeah. So the Chartered Financial Analyst designation was very, very important for me for two reasons. Number one, I didn't know anything. Like, I knew nothing. So I think I took the first exam my mom was still alive, so in 2010. And I passed the first one. The second one was rough because my mother was dying. I was studying in the hospital.
Mm.
And the second one is a tough exam. I was not in the industry.
Right.
This is like
And
serious.
you didn't study at undergrad. There's a lot of people who go and take the CFA who are like, I got it. I have an MBA already.
So everybody that takes level 2 is at an investment bank.
Yeah.
Right? Like, they have experience. I knew nothing. I took the test and I came home and cried. It was a disaster. So, but by the time I met Josh, I remained obsessed with the market, and didn't give up on my dream, which was to somehow get a career in the markets. Like, I remember sitting with somebody, they're like, well, do you want to work on the buy side and the sell side? And I was like, dude, any side.
Doesn't matter.
I don't even
right
know.
Down the middle.
I don't know which side is what, but any side. And so after I met Josh, it was great. We grew up in the same town.
That's also a bizarre coincidence.
So across the street from each other, I don't know if there was any overlap, but when I got divorced, so before my parents got divorced,
Oh, okay.
before my parents got,
Okay.
no, I'm married once. Before my parents got divorced, I lived here and he lived across the street 2 houses over.
Okay.
So he's 8 years older than me.
Right.
So I don't even know if there was any overlap, and even if there was, we wouldn't remember it.
Right.
So we grew up in the same town, so there was a lot of, familiarity.
Yes.
We spoke the same language.
Right.
So the interview went great, and I said to my wife, I remember like seeing a stack of resumes on his desk, and I said to her, if I don't get it, it's just because there's people that are more qualified, and boy, were there ever. Now, the advantage that I had was that I had some money in the bank for my mother, and I would have worked for free, and I basically did. Thrilled.
All right. So you start what year?
This was 2012.
Okay. So just to reframe where we are, it's 2012. It's after the financial crisis. The financial markets have come back, even though everybody's like, no, and nothing's ever going to happen good ever again.
Yeah.
You just talked about that with Belsky on your pod. I love that. And I remember it so well, by the way, because I remember everybody being so negative. And you're chugging along, and you get this job, you love the markets, but you're now working for an investment advisory firm, which is not a stock picking firm.
Mm-mm.
So what is the role that you thought you were going to take on, or what were you aspiring to become at the firm?
I don't know. I don't know there was a job description, and I don't know that I asked. What I said was, I made it very clear. I said to Barry, and I don't know if I should say this, but too late.
All right, hold on, Mark.
I went into Barry's office, and the entire interview was with Josh, and I don't think Barry knew that I worked for him until like maybe a year later. So when I met Barry, I said, I just want to be very clear. I'll give my left nut to work for you. Barry opened his drawer, and said, we got plenty of lefts. Can you spare a right one?
Oh, nice.
So
that guy's quick.
I would have done anything to work for them. And so the job was this. Everything, anything. What can you do?
Right.
The first day, I remember Josh tapping me on the shoulder and saying, I'm going to CNBC, get me some notes. And I was over the moon. I couldn't believe that this was happening to me.
It's amazing.
And then I also couldn't believe that Research in Motion was up for 8 days in a row, and he read what I wrote. And so that went on for a long time, and I developed more responsibilities over the years and over the weeks, months, and years, and it's been an incredible ride.
So what do you do now for the firm? You're the chief investment officer of the firm?
No.
Not really?
No. So
but you are like the resident egghead.
I'm on the investment committee.
All right. So what does that role mean for you? Like in terms of you're setting a tone for advisors who are Ritholtz advisors. Are you creating models for them, or is everyone a free agent? Like, how does it work?
Yeah. So we don't want any client outcome to be dictated by an advisor doing something that we don't believe in. And so our advisors have full autonomy to take the client through the process, create a financial plan, deliver the portfolios that we manage. We pick what goes inside of the portfolio, and it's up for the advisor to say, we think this model works for you.
Got it.
Some munis, some this, some that, whatever the case may be. I'm not talking to the advisors necessarily and them saying, hey, what do you think is the appropriate portfolio for this couple given X, Y, or Z? So I am on the investor committee along with Barry and a few others, and we determine the options for advisors to.
Oh, that's awesome. So let's talk a little bit about investing, and I know you love it, but in terms of the wealth building versus gambling, because it's fun to gamble.
Love it.
It is. It's fun to gamble. So when you look at long-term investing, if someone calls my show and comes on the air with us on this program, and we encourage you to do that, just go to jillonmoney.com and click the contact us button. We'll get you on the air. What is your view on passive investing, model investing, exchange traded funds, index funds, like the general approach to long-term wealth? What is the Michael Batnick approach?
Who am I talking to?
You're talking to individual investors who have more than a 10-year time horizon to build some wealth. And, we're not talking about their fund money account. We're talking about what should they do to build, like the do-it-yourselfer who wants to go to Fidelity or Vanguard or Schwab or E-Trade and do it themselves.
So I don't think this is debatable. The best way, investing's been solved. It's not a mystery. We know what to do. The best way for regular people who are not obsessed with the market, most people aren't, nor should they be, is to create a portfolio that you can stick with for the long term. That's not easy. It sounds very simple to say it. There's a line. Everybody has a line. And unfortunately, you don't know where your line is until you cross it. And you'll learn through the experience. So once you figured out your risk tolerance, index funds are the best way to go. Now, I'm not an active hater. I think that, bless them, they set prices for the market. I think that there are absolutely some people that do have alpha that can beat the market.
Yep.
But that's neither here nor there. For regular people who have no interest in doing any of that, your time is better spent on anything, everything outside of your investment portfolio.
And we talk about that with career. We talk about that with family. You lost a mother at a young point in your life. Like we were just talking before we came on the air, like you go to a funeral and boy, does that reset your brain and say what is important. So if you think it was incredibly important for you to be poring over spreadsheets and analyzing whether you should have the SPDR ETF or the S&P 500 fund at Vanguard, I think you're going to want those hours back in your life. Okay, that's just me. But I also want to ask you about my mug, which I love so much. So it's shocking for me to admit this, and I've done it many times. I am a complete wimp when it comes to investing. I take risks in my career. And by the way, producer Mark literally said to Rob, your guy, oh, Jill doesn't like risk. I'm like, bad thing to say to the guy I'm trying to go into a venture with. But that said, I don't like investing risk. I really don't. I'm not into it. I had it in my life. My dad blew out of his trading account 2 or 3 different times, very much seared into my memory. And even when I was a trader, I was a day trader on the floor of the commodities exchange where, we could do conversions for $1. Like basically you could make $1,000 a day and not take risk. You could have it go home flat. And that's what the beauty of a trading floor is. You're a bottom feeder, essentially, just picking up quarters that people are leaving on the floor. Okay. But in my real life, I have always been more of a 60-40 investor because I'll take risk in my career. I'll change careers. I'll reset my life. I'll just do something totally different. But generally speaking, 60 a little bit risk, 40 less risk. And for so long,
How'd that work out?
pretty freaking good.
Pretty good.
Pretty good. And I sleep at night. I like individual bonds more than bond funds just because I have enough money to buy them at a decent price. But, so many people have really been freaked out by this 60-40. The 60-40 is dead. 60-40 is dead. 2022 is a terrible year for stocks and bonds. So in the spirit of my mug, which I'm going to steal, just want you to know that. Don't. Okay. Is 60-40 dead?
Poppycock.
Poppycock.
It's alive and better than ever. For so many years, the 40 part of the 60-40 wasn't really pulling its weight.
No.
And bonds are really a function of arithmetic. The stock market is a biological, amorphous blob of emotions and numbers and different time horizons and all that sort of stuff. You could tell me everything about the future of a company, about the macro, and I couldn't confidently tell you what the stock would do.
Mm-hmm.
With bonds, it's just arithmetic. What's the starting coupon? That's probably what you're going to get over the term of the life of the bond.
Mm-hmm.
And prior to the pandemic, you were getting 2% on the 10-year treasury. Right? And so the stock market did the heavy lifting, gave you 14, 15% a year for a decade. Amazing. Those days are probably behind us. I don't think you should count on 15% for the next decade.
No.
If we get it, I won't complain, but you shouldn't count on it. What you can count on is with the 10-year closer to 4%, you can now get, that changes things dramatically.
Yeah.
So yes, we had to take, and over the years, I had been saying to investors, we're going to have to take a step back to take a step forward with bonds, because the only way that our fixed income is going to pay us a higher rate of return is if the fixed income goes up.
Yeah.
When the fixed income goes up, the prices will go down. Now, 2022, we ripped the Band-Aid right off.
That was a rough year, man.
It was tough.
I've had some bad years in my career, but last year was a rough year. I was so happy not to be in the investment management business.
It was hard.
It was a tough year.
It was hard. We've been trained, the social contract, the financial contract that we've signed as investors is, I'm taking risk in my stocks. I'm comfortable taking risk in stocks. I believe in capitalism up and to the right. The bonds are the safe part. And that was ripped into a million pieces. And it was really difficult because bonds were supposed to save you. And in fact, not only did they not save you, they were the reason why stocks went down. And so it was the double whammy that nobody wanted to swallow, but we got through it.
Yeah.
We got through it.
And this is, so we're talking on the day of the last Fed meeting of the year, where they will do nothing. 5.25 to 5.5%. I was on TV this morning and someone comes up to me, cameraman, of course, who always asks the best questions. When are they going to start cutting? And when that happens, what's going to happen in the bond market? That was an interesting question to get from somebody. It also is a question from somebody who has a great pension plan still and just manages his own money for fun. So
don't you think investors are so much more sophisticated now?
Oh my God.
Than they used to be?
Absolutely.
They figured it out. They know what's up.
Well, they are more sophisticated and just as stupid, which is great.
Of course.
Because we're human beings.
Of course.
We're stupid.
Well, that part never changes.
Yeah, exactly. And that's, it's a funny thing, my wife works in financial services and she doesn't really love the business. She likes her role. She likes her company. She likes what she does, right? I love the business, and I think I love the business not because I'm a little bit of an egg-headed math chick, because I love how emotional it is, because you can put the same set of facts down on a table, and everyone's emotions will really encourage them to lean one way or the other way. And so without getting too in the weeds, we have a Federal Reserve that was late to the game. They waited too long to start with their interest rate increases, then they go really fast, and then here we are. So 2024, how do you think this plays out in terms of where the Fed goes from here?
The Fed threaded the needle, is what Ben said to me on the podcast yesterday. And I said, no, they absolutely did not. They were recklessly driving 100 miles an hour, drunk, slammed on the brake, and managed to avoid an accident. They don't get credit for that, in my opinion.
I agree with you. I
So-
agree with you. Starting back in the mid 2000s, frankly, I can go back to Greenspan and say how much I hate him.
And they were drunk on Goldschlager. Like, it was ugly. So what do they do in 2024? When do they cut? Obviously I don't know. What I do know is that the market will react before they do. And you see that happening. The bond market is already cutting, right? Rates are significantly off their highs. But it does matter. The cost of capital absolutely matters, but maybe not as much as we thought. Maybe not as much as we thought.
Say more about that.
Well, monetary policy is a very blunt instrument, right? That's the phrase that people in finance use. It's not surgical. It's not precise. And what it really impacts, not necessarily consumer behavior, the housing market, which was where the wealth effect comes from it. But what they couldn't have predicted, or I don't think they could have predicted, was that you can't fix the demand problem for housing. That is structural. There are 70 million millennials. A lot of those people need to buy a house.
And really want it badly.
And that's not always a financial decision. You have a
Mhm.
first child, you have a second child. Okay, square feet. You need more of it.
Mark went off and bought a place in Brooklyn with a dopey high interest rate. Aunt Jill is so against this move. On the record, I might add.
You'll
And he did
refinance
it.
next year.
That's what exactly. He's not worried. He's like, oh, I'll have time to refinance. I don't care. I'm like, you guys are crazy.
But so what the higher interest rates did was it did nothing for demand,
No.
but it killed supply. Because people said, I can't afford to move. I have a 3% mortgage. Where am I going?
Yeah, I'm locked down in my place.
And so it kept interest rates in housing, it kept prices high. And not to mention, 65% of the nation owns a home. How many of them have a mortgage rate that's below 4%? Most of them.
yeah.
Most of them.
What is that? Is that like 62%? Is that what they said?
Has a mortgage rate below 5,
Yeah.
4, something like
4.
that. Yeah. Yeah.
That's crazy.
Yeah.
So if we look ahead, how important is it for people to think about what the Fed is doing? Like I'm
Through what lens?
I'm an individual investor. Like, I watch CBS Mornings, Jill's on the air. I talk about inflation. I say, it's going to come down, calm down, everybody. But, inflation, also, I would say the Fed, the reason why I think the worst part of the Fed and being late, not just that they were reckless, but when they waited to slam on the brakes, they could have kind of pumped the brakes sooner. And I don't think inflation would have spiked by as much. And I think that consumers would not have freaked out so much. Now, yeah, I get it. War in Ukraine, energy prices beyond their control. But it is possible that the Fed made the inflation pop much more dramatic and indelible in a lot of consumers, which I think is why so many people are like, everything costs more. Everything does cost more. And I can't stop myself from thinking that, even if I got a raise, even if my house is up in value, but gosh darn it, it is expensive to go out to dinner.
People feel like they deserve their raise. They don't deserve higher prices. And you adjust, right? As one does. Cool, I got a raise. It's a nice adrenaline rush for maybe 3 paychecks. And then you get used to it.
Yeah.
But oh my God, my Chipotle costs $14 and I see that every day and I can't get over it.
Right.
And so we had 10 years worth of price increases in a 20-month window. And that's why you see all sorts of funky things going on between the sentiment, how people feel versus how the economy actually is.
Mm-hmm.
It's understandable. People are pissed off. Everything's so much more expensive. I'm pissed off.
Really?
I mean, a little bit. Yeah.
Why? What's wrong with your life? Things
No.
are good.
Listen, I'm the luckiest. We just went over my story. I am truly the luckiest person that I know. But no, I'm empathetic to why people are pissed off.
I agree with that. And I think that, I learned this lesson early in my career. I think one of the first times I was on CBS was on The Early Show in 2008. And I was talking with Harry Smith, who was the anchor then. And I said on the air, don't panic, because the markets were getting crushed. And my mother called me up and she goes, you should never say that.
That doesn't work.
She goes, don't say that. I am panicked.
I'm scared too.
And I'm scared.
Yeah.
And tell me that it's okay to be scared. And now tell me why I can stop being as scared as I am. It was like the best note that my mother's
You
ever
would be
given
very
me.
proud of me. Those were the conversations that I was having with our clients in March of 2020. Now, I'm not an advisor.
Mm-hmm.
I'm not a CFP.
Right.
These are not my relationships. But when things like this happen, they want to talk to the investment person.
Right.
And that was my message. I'm scared too.
I'm scared too. It's
and
like
then
you don't know.
if you could empathize and be a human being, and then maybe also provide some data to help with
Right.
it, then I think that's a pretty good recipe for success.
So you've now been doing this for a dozen years. What's the most surprising thing that strikes you about the business, investing? What's surprising to you?
Oh man, I wish I had time to think about this.
You have at least 20 seconds.
This is not an answer, but maybe it's my own. I'm still obsessed with the market, and I was talking with Josh about this. Like, I feel like when Josh is done, he could be done, you know. But I don't think I'll ever be done. I think when I'm 70, like, unfortunately, I will still be at the screen.
My dad, when he left the trading floor, he got with a bunch of his buddies from the American Stock Exchange. They created their own mini desk off the floor. And they finished doing that, and they were, let's say, in their 60s, and they all retired. And still, my father, just because he was that kind of person, that he would sit there with his yellow legal pad, watching CNBC, watching the runoff, marking his positions by hand with his calculator, looking at his options expiration, trying to figure out what to do next. And I begged him to please, as he got older, to clean this up and keep one fund money account, but keep the real money somewhere else, so that if something happened to him, that it would be easier for us with my mother. And he was okay with that. Like, he didn't care how much. He did want to be in it. That was the thing that was very interesting to me, that it could have been $10,000, $100,000, or $1 million.
Well, it's a game, and we like playing.
And it's like saying to somebody, I really love bridge.
Yeah.
By the way, traders are great bridge players.
I don't know about bridge. I know Warren Buffett likes bridge. I don't know about bridge. I think I recognize that people are very bad at predicting how they'll be in the future.
Yes.
And I understand that, you grow up and things change. And I don't know, maybe when I'm 70, I will want nothing to do with the market. That's possible. But I love it. I really do. It's the first thing I do in the morning and the last thing I do before I go to bed.
And in between, you shove in some Knicks and some Giants and
so
other stuff.
I love helping to run this business. I love the entrepreneurial aspect of it.
Mm-hmm.
I love and sometimes hate the peaceful aspect of it. I love helping our clients. Like, I love everything about what we're doing.
I mean, you're a very happy guy. And yet your DNA would belie that. You probably have somewhat of a pessimistic DNA.
I'm very complicated.
I love that. I'm sorry, but our time is up, as the shrink would say. Before we do go, are you going to pop in and watch these episodes where people basically tell you their life stories? Is it like amazing to you to think that people just do this every time we talk to them?
I love how it's a testament to you, how comfortable people feel with you. There is not a small audience of people that are watching what you're doing. These people, credit to you, feel like they can open up to you, not be judged, actually receive wisdom, good advice, permission to do things that they don't get from other people. I love it. I think it's a great program, and you're helping people every day. It's admirable.
It's so much fun because someone said to me recently, I was doing a speaking gig, and I was talking about my book, and I was talking about how I reset and went from like a Ritholtz type of business and went into media. And someone asked me a question during the Q&A and said, do you miss being in the business? And I said, I'm in it every day. I get to talk to real people, but it's more like I'm an emergency room doctor. Like, I patch you up and I move you on. And if you need an advisor, you should go get an advisor. Or if you've got a big decision to make, I want to frame it for you and help you peel away the emotions from the financial stuff. And they said, well, do you miss being an entrepreneur? And I said, well, actually,
You are.
I am an entrepreneur. In fact, I just launched a new YouTube channel with my boys at the compound, and I couldn't be happier. And Michael, it is true that we all kind of fell in love at that first March 2023. So it's not even a year that I've known you
I feel like I've known you
guys.
my whole life.
I know. And so there's like this this beshert, this kismet, this like it was meant to be feeling about meeting you and Josh and being in a studio live with you. And I remember I came off the air and I called Mark up and I said, I got to do something with these guys. They're amazing. So
we had the same reaction.
I mean, and it was just great. And the community is great. And the staff, the people who help you create this. So Nicole and John and Duncan and now Daniel. Daniel seems very, I don't know, kind of buttoned down. He's sort of like this. So I'm open up, my friend. You've built a great organization, and I just want to say how happy and grateful I am, and Mark and I are, to be part of this. So we are, cheers to the 60/40 portfolio,
Absolutely.
Cheers to the compound, and cheers to Jill on Money powered by the compound. So thank you for joining us today.
Thank you.
All right, now, here's the deal. This is not me just telling a story about Michael's life. So whatever, you got his life, great. But it's all about your life. And if you want to come on this program and talk about the decisions you've made, and also you can tell us about your financial journey, do go to the website, jillonmoney.com, click the Contact Us button, tell us what's going on, and a box will come up and it'll say, do you want to come on Jill on Money powered by the compound? Mark does everything else, and we'll get you on the air. You know, you could change your name. No one really knows who you are anyway. No one cares. So we'd love to have you. Don't forget to like us and subscribe, and also subscribe to all of the compound content because it's amazing and it's rich and it's fun. So thank you so much for listening and watching on our audio show. We like to end by telling you to change your work, change your wealth, change your life. Thank you so much for listening, and we'll talk to you next time.